Okay, so welcome to this panel discussion. We're going to take the view of the investor now, looking at the view of people who are investing in venture capital funds in this space, or looking at the point of view of the funds as they try to seek investments. And so maybe first of all, I could just allow members of the panel to introduce themselves, though, because their background obviously is relevant to that. We've esteemed panel. Can we start with Kevin, maybe and work across, if you'd like to just take a moment?
Sure. Hello? We on? Okay. How you guys doing? Thanks for being here. Kevin Sultani from Jima Group. We're an alternative advisory consulting services, mainly with blockchain, crypto projects, esports, and cannabis. We work with funds and VCs. We represent family offices, and we invest and co-invest ourselves in all three of those sectors.
Hi guys, it's Tony from NGC Ventures. We are a crypto and equity fund based in Singapore, Shanghai, and San Francisco. Thank you.
Hi everyone, I'm Herbert, thebitcoinman.com, that's me. So I'm also head of business development at Brocktogen FinTech Group. And on top of that, like announcing today, I am actually joining as advisor to Future One Exchange, an Estonian licensed exchange. And of course, on top of that, I've been investing into many projects. Most recently, 2 weeks ago, I invested $3.5 million into two different startups. One called Taudas, a Malta startup, as well as another one called DIY Blockchain, blockchain as a service for the industry.
Hi everyone, Kenrick. I'm with Lunex Ventures, and Lunex Ventures is a crypto venture capital firm that I spun out of Golden Gate Ventures, and Golden Gate Ventures is a traditional VC. We're based here in Singapore. So what we invest in is across cryptocurrencies as well as equity in early stage startups. So we do mostly seed deals in Singapore or anywhere else, basically.
Great, thank you for that. So maybe we could start by just looking at the sort of an overview of the space from a VC perspective. One of the first questions is, how do you categorize the different elements of the space? And you know, are there certain areas that you prefer to focus on more than others? For example, are you interested in trading in the tokens, in ICOs, or are you interested in blockchain-related tech solutions? So why don't we maybe start with some discussion of that? Would you like to begin?
Yeah, for us personally, and our initiative, I guess, mission is to focus on use cases. I know that's very cliche, that's said a lot, but use cases for health tech, use cases for communication, use cases for identification, verification. So all of these have to do with blockchain. We very little work with cryptocurrencies as a investment, other than in our algorithm, which is making very beautiful percentages, of course, because it's very risk-off. However, that's the only thing we do in crypto. Everything we do is in use case blockchain. So I just mentioned a few of those. My personal passion is in smart cities and in identification. So I believe truly that both of those are massive, massive and adoptable applications within blockchain. I think that smart cities, you're seeing what's happening in Dubai. You're seeing the government and what the power of Unity can do if they choose to go on the blockchain. And you can see things like identification, verification, or security, and what that can do for maybe pharmaceuticals and the future of health tech. You're seeing these pharmaceuticals go through a shift, and you're seeing identity is the biggest and most expensive portion of their headache and growing. So I think this is a perfect marriage, and it's so seamless, it's so easy, it's so cost-effective for these pharmaceuticals insurance providers that why not take a second look at something like a blockchain for your business. And last note, I would add, and I guess this kind of borders with crypto again, is point of sale systems as it pertains to certain industries that are difficult to have access to capital. Cannabis is one of those in California, that you cannot hold cash in the bank or you cannot own a bank account. So this is a perfect marriage for something like that. Or in a third world country where access to capital is very difficult for a startup or otherwise. I think that point of sale systems and that part of crypto can be very beneficial.
Well, yes. NGC Ventures is like a $400 million fund, so we do have a lot of different strategies on different asset class. So yeah, aside from equity investment, we also do crypto. And we love crypto as well because in terms of the return, I would say it's pretty good in terms of that. One thing is different from traditional VC and crypto investment, right? Since the last 18 months, we have been doing venture capital, private equity investment. So it's quite interesting to see how different they are because a lot of deals, projects, which is good in terms of traditional venture capital investment point of view, doesn't really take off in the crypto space. On the other hand, a lot of projects that are not so good in the crypto space, right? They make money. Well, so how do you really capture the trend and as well finding the fundamental value? That is interesting balance we're always trying to strike. So that's why I say it's difference between traditional VC and crypto fund. What is the common things among the two industry, right? I say people. It's always, I would say, the better teams are always able to shine. It doesn't really matter whether in the startup or crypto startup. They always have a higher chance to beat the markets. So finding the right team, that's always number one rule for us.
So, okay, so very quickly, for myself, I am coming in as an angel investor myself. Personally, I've invested into different projects across the world. I was the ex-global operations director from Huobi, so we actually get to see hundreds of projects within the blockchain space on an even daily basis. So I think very quickly, I was able to actually scour across the best projects and pick the best ones out from there. So one of the evaluation tactics we actually developed alongside with Tsinghua University was a 72 checkpoint list on how to actually evaluate blockchain projects. Simply things from the fundamentals, like looking at the founders of the exchange, seeing their background, if they have an illustrious career, be it from startups to even the corporate sector. And of course, on top of that, you want to look into the proprietary technology that the guys would have, the startups. And of course, like we mentioned earlier, my panelists, I think the thing we want to look at also is, the drive of the company. Like if you speak to the founders and you see that they are very hungry and driven, I think these are some traits that the startup can actually survive in the like continuing years ahead. So the ones that I invested into recently, like for example, DIY blockchain, they had the likes of IBM and even like Oracle that came in to invest with these guys. Even though it's with credits, but it actually speaks miles compared to the other startups. And like for example, like at Brocktagon Group, what we have is we invested into Panzer Tech. It's a world-first smart city set to actually complete by 2021. And even though it's at its very fundamental stage whereby we are tokenizing the whole entire retail space for this smart city, it is a milestone within the blockchain industry as well. So I think it's more about coming up that simple differentiator kind of point to establish your startup. Yeah.
Yeah, I think the whole industry is still so nascent that each crypto fund, at least we see, they all have a different thesis or a different kind of outlook on how to invest or what to invest in. So I can't speak for everyone, but I can kind of say what kind of angle we're coming from. So for us, the comparison is very much along the lines of how the internet developed. So we're not looking at the application layer at the moment, as we still think it's a little bit too early for that. So then it comes down to the individual fund managers, like what is their outlook on the industry? And for us, it's a longer term outlook. Like we think you need to invest from a VC perspective. You need to invest in companies, you need to invest early on, and then the services and industries around the ecosystem. And where do we think the ecosystem is going? I still view, I think Bitcoin is the nucleus of this whole thing. Like there is an enormous opportunity just around a non-sovereign, independent, free market currency, and the services around that will flourish and will develop. And outside of that, you'll have other applications on the open permissionless blockchain. So our thesis is very much around open, permissionless, immutable blockchains, so the main ones and those services around it. So we invest in, right now we invest in, for example, custody providers, KYC AML providers, SaaS solutions for institutions, basically anything to drive the next level of adoption, because that's what we need to see. We need to see larger players, we need to see family offices, we need to see institutions, we need to see endowments to enter this industry before we can get that next wave. And that's kind of the layer that we're investing in now. But you might find different views and different theses depending on who you speak to. But nobody can exactly predict where we're going to be in 10 years, but that's our thesis or how we look at it.
Great. But, Herbert, you mentioned you have a sort of quite a comprehensive checklist when you're evaluating the underlying companies that you look at. Maybe would you like to talk a little bit about specific things that you see as being key in the diligence process when you're looking at these potential seed companies?
Okay, so very quickly, this tech that was developed by Huobi and Tsinghua is one that has been running in the whole entire blockchain community since 2013 to 2017, where Huobi actually took 80% of the whole entire world's trading volume, and of that, 60% was on Huobi. So back then, from 2013 to 2017, the whole entire world trading volume was actually within China region itself. And I think during that period of time, we saw a lot of new blockchain startups within China. And it was ridiculously crazy. I think every other week we had tens and like at least 10 projects all lining up to be vetted through. So we had a quick sit down with the university itself, the top university in China, Tsinghua, with the professors to actually come up with how can we vet through very quickly. So I think the main points that we were looking at is mainly the founders. If they have a very good history, I would say, example, if they come from a background, they were JP Morgan, Goldman Sachs guys, ex-bankers, or they were startup founders themselves. I think this is a very good indicator already that the startup would usually take off, usually. So, of course, other things we're looking at is proprietary technology. I think earlier today, even with NGC, there was this project that was doing in food technology that Singapore is actually pushing ahead as well. So these are some interesting things that people look out for. What is the next trend? And what is the new technology that's going to revolutionize the sector? Be it AI, be it virtual reality, AR, fashion technology, and many more. So over the years, it has moved across industry. It's industry agnostic. It's about that specific proprietary technology. And of course, like moving forward, I mentioned about the team as well. I think hiring the core team is very important, the advisors joining on board as well. If you're going to get some controversial advisor, it may actually help at the start for marketing, but over time, it may also cost of the whole entire project itself. So, of course, next in play, if you're in blockchain, you will need to look at the tokenomics. I think over the past 2-3 years, especially, we see a whole evolution, from the space. People burn the tokens, people buy back tokens, and there's many, many more. We even see things like exchange, like transactional mining, and things like that. So the industry moved from ICO, IEO to STOs, and now there's going to be much more developments to come. So I think it's very difficult to pinpoint the one thing per se to look at the project. I think my panelists would have more to add on as well. Yeah.
I mean, you mentioned STO and the craze of IEO, STO, and right after the ICO craze, I guess you could call it, we had crypto winter, whatever that means, and now we're here. So 99%, we had this conversation just 5 minutes ago, 99% of STOs that are announcing as STOs, maybe some in the room or in the event this week, are not proper STOs. And they're not ever going to be, because they're not taking the proper steps to be. And if you know what securities are and how they work and how they function, then it's a very sophisticated financial instrument. It's very sophisticated. So to just announce these things, so we had a funny conversation. An STO advisor is an oxymoron. If you look at what that two words mean, STO or whatever, STO advisor. It's a securities. You need to be a licensed broker for securities. So that's a main topic of concern for me when I'm looking at some of these projects. And IEOs now, it seems to be a hot topic. I don't even think they can explain what an IEO is, so they hire an advisor from financial backgrounds. And just to piggyback off of your team point, and that's most important for me, because if it was non-crypto blockchain, I would say the CEO, if it's not a technical CEO, should be hired. You should always hire the CEO, unless it's a technical CEO like a Zuckerberg who wrote the code. But in this industry, I believe that a CFO is the most important person that needs to be installed in these crypto blockchain projects. Because they're given all this money through ICOs or traditional investments, and they don't know what they're doing with it. Burn rates are through the roof. There's some that we're looking at right now that I can't, justify the burn rate. But the project is so damn good. So, like, what do we do here? So we're stuck between a rock and a hard place, and it's up to us and everybody in the room, but mostly us because we come from the financial backgrounds to filter that. And we have teams, I can already tell you, I didn't ask any of them, but I can probably tell you, each one of us has a team or at least one person doing filtering and screening for everything. And that's from financials, that's from auditing, that's from startups, that's everything. So, yeah.
Sure. Tony, I don't know if you have anything in particular to add to on the diligence question.
Yeah, I agree from what my friend has said, right? It's more like looking for the better ones from the crowd. And I think it's an early stage industry, right? You couldn't expect the best team coming into this stage yet. So it's more like trying to find the better ones rather than, finding out that the problem are. So it's more like that.
Sure. Kendrick.
Yeah, I think what we mostly look at, so we come from a traditional VC background, so what we focus on is, A, does it fit our thesis? Like, does it really, really fit our thesis with where we think the world will be in a couple of years' time? And then B, is the founder, it's 100% about the founding team. Are they good enough? So meaning, have they founded companies before? Have they had exits before? Are they flexible enough? Are they coachable? Are they able to pivot on time? Those are basically the two main things that we evaluate. And especially at the seed level or even at Series A level, there's only that much kind of other DD you can do in terms of financials or books or tech reviews. It's really about trusting the people that you invest in, that they will be able to build what they promise they will build, and for us to have that confidence.
Sure. And Kendrick, when you're looking at companies that are using blockchain technology, how do you go about sort of assessing whether you think they've got a scalable model? Is there anything in particular that you look for in terms of how they're going to build out with the technology that they've got?
Yeah, a scalable model can mean different things, right? So in terms of scalability of blockchain, it's like throughput and these kind of things. We look at it more from a business scalability point of view. So in traditional VC, you also look at tech startups, like how can they scale? They can scale because they have a certain business model, which is easy to replicate across many different industries, countries. So basically SaaS models work very well, and that's basically the same what we look for in blockchain or crypto startups. So do they provide a model that everybody can easily onboard with? Maybe they need a sales team, that's fine, but it needs to be a tech-enabled solution that they can easily sell to a large part of the world without having to customize each individual solution, because the more customized you get towards each customer, it becomes more of a consulting business, which are viable businesses by itself, but we invest in companies that we think can do 100x on our investment, because in early stage VC, it's kind of the norm that 80% of companies fail in the end, so our 100x's need to make up for some of those that don't make it.
Sure. Herbert, would you like to add, or Tony? Yeah.
Okay, I think scalability is one thing that like investors definitely look into as well. It's how we get our 10x or more. And of course, for blockchain aspect, you want to actually, like for investors, we are looking at projects that can eventually get listed on exchanges and of course, give us our 10x back. So along the way, scalability and the ability to actually market across the industry to make as much noise as possible, I think, and get more investors come on board to buy the tokens as well. That is something that is very important within the blockchain crypto space in terms of investment. So if you're actually a startup today, I think one thing you would need to actually study is how the other successful ICOs, for example, actually market their tokens. So I've joined the space since 2010 and seen the Huobi from 2013 to 2017. So the thing is, projects that have come and go, but there are some that actually stayed on for a long, long time. Some that even started off as a Ponzi or even a MLM, eventually evolved over time, developing their tech. I'm not going to mention the specific names, but there are some that went on to develop the technology and even get the license in America, for example. So I think I already give enough clues already. So yeah, so the thing now is okay, like most recently, about 3 months ago, there was a major event a conference in Singapore, whereby a project actually raised $3 billion in China. Okay, I'm also not going to name names, but they did it through multiple means as well. But for projects like this to come about and become so successful, it all stemmed from the marketing. Yeah, so I think the founding members is very important, especially the marketing as well, besides the tech. Because the tech right now in the industry of blockchain is still very at an infant stage. Of course, there's many new technologies being developed. The latest one, like there's BitTorrent founder who actually came up with a proof of space and time consensus algorithm. So there are many tech that's ongoing at this point of time. But what really drives the crypto space is the trading, the volatility, and that all stems from marketing. Yeah.
Tony, I see you nodding and with a right smile there. You must have some tales to tell.
I agree. I'll say number one important stuff is scalable marketing. Yeah, as I said, I'll talk about the scalable of technology. What is scalable technology? Bitcoin is scalable. In what sense? It's a scalable banking, right? So right now, if you talk about blockchain, how can it be more scalable than the traditional business? Think about this. Why banking are not scalable, right? Because there's so many regulations, laws. There are man-made walls. In blockchain, the walls are not built yet, right? People are trying to build it now. So, there's some industry, I'll give you some more examples, that is by nature scalable if you are doing that on blockchain rather than the traditional space. And what I call them is a virtual economy. What do I mean by that? Finance is one example, right? Bitcoin can do global payment transfer very scalably. But if you move it up one level, we call DeFi, right? Decentralized finance. You can do crypto lending. Let's say we are the investor into the world's second largest crypto lending company. How can we grow to that in 10 months' time, grow by 20 times? It's not possible in the traditional space, but in the blockchain, because it's borderless, there's no regulation, there's no whatever law, you just can grow as much as you can, right? So that is what I call scalable business growth. And if you think about other virtual economy, something like gaming, something like video streaming, BitTorrent is one example as well. So virtual economy, at this point in time, is probably, from my point of view, right, it's a scalable business model on blockchain. If you talk about, on the street, other business, let's say e-commerce, not commerce, logistics, they are great, but still they are subject to many offline business development blocks. You need to develop your business, right, in 12 months' time. You need to invoice in and out. So from my point of view, it's less scalable compared to virtual economy. So that's my 2 cents.
Yeah, a lot of good points. On scalability, banking, obviously, it's huge. But I said it in the beginning, for us, a passion of ours is, and what we invest in and work with is identification. So if you look at the scalability of a blockchain application for identification, I don't have to regurgitate a bunch of stuff, but it's very scalable. It's not just with verification, but security and the applications for further patents regarding what you see in what do they call them? Vending machines. So that's a big up-and-comer, not just in cannabis and pharmaceuticals, but in all encompassing. Just want to touch back on a point Herbert made about marketing. 100%. It's 1,000% true. If you look at marketing in our industry, it hasn't been typically done correctly too much, because if you do it correctly, you either look like a scam artist or it's just not a good product that you're trying to cover up. Most scam artists don't know how to market. But the funny thing is that the ones that do make a lot of money. BitTorrent was a perfect example of a good ICO with good marketing. What was it, 18 minutes, 7 million, right? Or was it 7 minutes, 18 million, right? That's it, right? That's what marketing can do. But of course, look who was behind that, right? So it's not just a tweet, it's not just the influencers, but it's proper marketing teams. So what we talked about earlier with screening, which we think is a huge thing, I think is a huge thing in our business and investing. I also think marketing for the team. So not just a marketer, but where did the marketing guy come from? And what is he doing in a blockchain business or a crypto business? Because like I said, if he does it too much, it's going to look like a scam, like a pump or something. And if he does it too little, then he's not ever going to get any business. So
it's a very good point. I mean, one thing I have to say that I noticed when I got involved in this space was just how glossy all the websites were, but it really gave you very, very little sense of the content.
You have a glossy website, and you're judged for being, pumping your public sale. And if you have a crappy website, your ICO or your public sale is crap, and therefore it's going to maybe be a shitcoin. And for their, these are you see what we've stigmatized in our industry? This is our fault. This is everybody's fault in this room. We've stigmatized things with the glossy websites, and I know some people in this room with some of the best design work and some of the best products, but they're not getting any money because they look too glitz and glamoury. What are we doing here?
So these are all good points. If we could just shift a little bit the tack now to think about the funds that are investing in the space. And I don't know whether you, like personally or in your company role, whether you're actually involved in investments in crypto funds or whether you're seeing things around the market. But I mean, have you sensed any particular changes in the types of funds that are being set up? I don't know whether you...
Yeah, I mean, what we've seen, like, so like crypto funds in general are a relatively new phenomenon, right? Like in the early days, it was funds, but that was more like LTDs that were being run as funds. The problem here is like first of all, those types of funds that were started in the early days, they were mainly kind of hedge fund style. So they were kind of open-ended, they were trading tokens, only invested in tokens. VC hasn't looked at this industry that much yet. So in Singapore, we're the first kind of traditional VC with a dedicated fund like this. In the US, you have a couple, of course, A16Z and Polychain and Digital Currency Group. But the problem with many funds is also the regulatory environment. So we are running as a licensed fund manager in Singapore under the Golden Gate license. But as an individual standalone crypto fund, if you hold crypto assets, that's still very difficult to do in a regulated way, simply because those assets are not classified with the regulators, not in Singapore, not in the US. And that just makes it very difficult to have a legal kind of structure that larger investors feel comfortable investing in. And a lot of these funds are first-time funds or first-time fund founders. That just makes it will take time to develop before you see the larger, more institutional, professional managers coming in. And we've only seen the beginning of that now, I think. So that will take another 2, 3, 4 years to develop before you get a bit more professional funds. And then I think you'll also see more the VC style longer term as opposed to just doing tokens.
Okay, so I think VCs, traditional funds, all the FSIs, financial service institutions are all actually still on the conservative end. You would actually see this very, very much so, especially in America, especially the past 2 years, if you were at Consensus itself, you would actually notice that the space is very quiet. No one is really investing at all. The only investment money that's actually churning within the industry is actually coming out from China, Hong Kong, and Singapore. And that's why the world, all the blockchain projects are all moving towards this area, this region. And now the thing is, one thing you have to see is actually where Bitcoin money is coming. So now the thing is, the investors that are actually investing are right now people that have invested in Bitcoin earlier. Yeah, so that's where they got their money from. They came in early, they bought Bitcoin maybe at $1,000, they had a 19x exit, and then they're reinvesting into the sector. And that's what's happening. That's what I'm seeing happening at the moment. And then, but how did they even get rich? Yeah, you would ask. So now the thing is, as you know, in December 2017, the whole entire shift changed, where the people that used to hold Bitcoin all sold. And the new people who bought in are actually the financial sector, right? The central banks of the world. And so this exchange of hands happened in December 2017. And then the guys who sold the money, sold the Bitcoin, now have the money to reinvest into a sector. And that's what's happening in the space. And I'm speaking it out of experience as well, even myself. So I came in early in 2010, bought in Bitcoin at a really low price, $20-ish. And the thing is, I actually also cashed out at close to the peak. And with that money, I'm actually reinvesting in a sector as well, from activism, charity arm, all the way into different proprietary technologies. And the way I see it, I'm speaking to other fellow whales in the industry, and I think they are also, I can't really speak for them, but for a few of them, they're actually looking at reinvesting into a sector. And because this space is really potential, you see even the likes of Facebook launching their own Libra currency. China, 2 weeks ago, they announced that they're going to launch their own cryptocurrency. Singapore, for almost 2 years now, they have been researching in this space with Project Ubin, phase 1, phase 2. And MAS has always been very innovative and very proactive within the space as well. Like without even coming up with any regulations to suppress the sector. And that is something very commendable among governments across the world. So the way I see it, Singapore and Malta are among the 2 leading countries for blockchain. But if you would see Malta and Singapore, the infrastructure here is already there. We are one of the top financial hubs in the world, and that is one of the reasons why blockchain companies are flocking to Singapore to set up here. And of course, even the VC space, among the panelists here, we have NGC here, just mentioned the $400 million up for grabs as well. These are things that startups can actually get a chance to actually tap into the whole entire funds that are here within Asia itself. The way I see it, China, it's also very progressive. I mean, for them to actually want to launch their own cryptocurrency way before America does. And that is something that I think the industry is also looking out into. Yep.
Yeah, it's very interesting to see the whales are reinvesting, so they can be our LPs, right, into the fund too. So we are friends to many crypto funds. What's happening in the last 18 months is very interesting. Right now, 18 months ago, if I'm doing crypto fund. Okay, understand. But now it's different. Now it's, okay, you're doing crypto fund, so what do you focus? It's very similar to what traditional market is doing now, right? If you run a fund, what do you focus? Do you do seed stage, early stage, Series A stage, growth stage, or buyout, or secondary market, hedge fund? So in the crypto, that is what I see is happening. Everyone, depending on their priorities, right, and competitive strengths, they are trying to focus on certain sector of the market. And I see that it's getting more segregated in that sense. So I think that is interesting thing to see happen.
I think the funds are definitely evolving, and they're becoming, like you said, segregated, but kind of specified as well. You have a fund for trading, you have a fund for mining, you have a fund for just about everything now, which is fine, which is good. That's showing sophistication. That's showing, like I said, evolving of where the industry is going from a financial perspective. So that's the only thing we can ask for to become legitimate. Like my friend said over here, if China, Iran, well, Venezuela didn't go too well, but if these guys can figure it out with their cryptos and announce it before the first world does, I think we just shifted what the world looks like, as far as digital assets go. If you're going to look at the financials of this and what the funds are looking after, like I said, and what he said, it's specified and it's segregated, but reinvesting is happening at a much higher pace. And what Herbert said is, if you go to consensus or if you just come to America, it's dead. There's zero money in the space. If you want to talk about what percentages look like, okay, just under 1%. I would say not even 1%. If I'm not, I would love to. If I'm wrong, please, tell me. But it's not even 1%, right? So we got to continue to do what we do. But the funds that we're talking about, I would just add Dubai to that list. So Dubai was the largest raiser of tokens in 2018 with 228 million. Second was here. So second was here. But that can be argued. The money is what it is over there. But so the funds are evolving. This is good. The sophistication is good.
Good. I think we have time for one more question to think about here. So you mentioned Herbert, that you're looking at people who did extremely well particularly on Bitcoin, but maybe in other areas, and then are now reinvesting. When you're assessing someone's track record, particularly if they've maybe had an easy ride on the market, are there any particular things that you're looking for in terms of how to judge people's investment skills in this space?
Okay, I guess being in the space for quite some time now, I've been actually secretly investing into many different tokens as well. But of course, if you were to ride the hype, it was all within the December 2017 when Bitcoin was at its height, and then the whole altcoin market as well had many X, more than Bitcoin even. So I think at that point of time, it was very important to look into every single altcoin because there's a possibility there to actually spike way beyond Bitcoin. So at that point of time, I remember in February, one of the tokens I invested to was Zilliqa. They came out sharding, even the sharding technology, even before Ethereum did. And that really spiked the whole entire market. It became like 22x in less than a couple of months. And that really boosted my whole entire portfolio. And of course, there were many other tokens as well. I think, like I mentioned earlier, there was the Bram Cohen, the proof of space and time. The whole entire decentralized cloud storage space is something to look out for as well. Because at this point of time, every single project in the world requires data and your cloud space. Right? So now the next thing now is when everything is decentralized, meaning whoever needs to mine, as long as you have a computer and data storage space and you can help to add on to the mining, that's proof of capacity. And the thing is, the more computers are actually mining it, it becomes more scalable, number one. And number two, it becomes more secure and decentralized, making it the next future out there. And the likes of IBM, Oracle, like all the data storage companies are all moving in towards this sector very, very quickly. And the godfather of decentralization, BitTorrent as we know it, the father of downloads and all. The thing now is, if all these top scientists in the world are all looking towards this sector, in fact, just earlier today at Coin Time in Vietnam, the Huo Pi, head of research, was also talking about the subject of decentralized cloud storage. So I'm actually talking more about this because I would say this is the next space that everybody is looking into. If you have not actually invested in this sector, I would actually encourage you to look into it. Just a disclaimer, this is not a financial advice here. It's just something that you can actually look out for in the technology. So especially in the startup sector, I'm actually looking for projects to invest in actively. And so if a project actually showcases an angle, a potential for scaling up very quickly, and there's a potential for return of investment, then that's something I would definitely want to check it out. So I think I speak on, like my fellow panelists would feel the same way as well. It's all about the 10x, 20x that we can actually get from the project itself. Yeah.
Good. We just have a few seconds left, so we could just have any sort of final views or comments on track record. We can just give the other panelists a moment to express a view.
Well, I think there are actually third-party agencies doing that independent research, looking at all the funds. One of them is PageBook. It's one of the most famous media, right, globally. They are doing private equity, now doing crypto as well. Well, they have a top 10 crypto fund award last year. NGC is one of them. So, or you can take a look at the report. It's quite comprehensive reports, looking at all the facts, data, returns, right? Companies on blockchain, everything's open. So yeah, that's probably the better source of information.
Well, just a track record. Look, it's easy to pump numbers. I would advise anybody looking to invest in these trading, teams or whatever, check their website and see if they updated the percentage from 2017. I can guarantee you all of those numbers are from 2017. Whereas guys like us will tell you we lost in 18 or 19 or 2007. But just be careful. So track record is a tough, sticky situation.
Make sure whoever you invest with, if it's a fund, that they have a fund administrator and an auditor, and ask for the latest NAV reports. That should be a good start.
Indeed, and if the track record is audited, obviously you have a lot more faith in that. The quick legal notice, of course, is if you're doing a pitch book for a fund, make sure that you disclose all of your investment results. You can't actually be selective, otherwise you run into securities fraud issues. Anyway, that's the comment from my end. Do we have time for any questions? Looking to the organizers, I believe that we're pretty much, time is up now? Time is up, but we could take one or two questions. If anyone in the audience would like to raise, then raise your hand.
So this is the last session anyways for the day.
Okay.
Any questions? Please raise your hand. Any questions? No? Okay. So the panelists will still be available. We still have another session for the day, which is a startup Grand Slam pitch competition. So the panelists, I'm sure they'll still be available for another hour, I believe. So if you have any questions, please feel free to ask them. Thank you very much. We take